First daughter, Ivanka Trump, tripping up a little bit during her victory lap yesterday in an interview about the GOP tax bill. She caused not a little confusion with these comments.
I'm really looking forward to doing a lot of traveling in April when people realize the effect that this has, both on the process of filling out their taxes. The vast majority will be doing so on a single postcard, but also having experienced the relief that will be starting as early as February.
What, a postcard? Chief Business Correspondent Christine Romans here to fact check a little bit and clarify, no postcards.
No postcard this year. Ivanka mixing up her dates a little bit here. The new tax bill won't affect the taxes that you are filing on April 17th of this year. That doesn't happen this year. That tax return is for 2017, so it still falls under the current tax code bill. So when do the new rules kick in? They kick in January 1st this year. That'll affect your 2018 tax returns, which you file in April 2019. Are you following me? Ivanka also mentioned briefly there's relief in February, and that is true. That is when you're going to start to see the IRS adjusting taxes on your paycheck, withholding less money. Now, she did later clarify. She clarified her comments on Twitter when someone pointed out her mistake. She wrote that in April, Americans will be thinking about how cumbersome the old tax code is and energized about upcoming simplification. But filing your taxes on a postcard, definitely not happening this year, maybe unlikely next year, too, because the tax bill is not the simplification that GOP leaders promised. There are still a lot of credits and deductions to sort through. However, there are some things that you can do right now to lower your tax bill for next year, like prepay your property taxes. This is for high tax states, New York, New Jersey, Illinois, California. The tax bill caps the SALT deduction at $10,000. So if you prepay this year, you can deduct them under the old rules for 2017. Check with your local tax office, though, and see if you can pay right now. Some are allowing it, some are not. Also, you can defer any income for next year for lower tax rates, pay any expense that will no longer be tax-free, like work-related expenses and tax prep fees, and make charitable donations ahead of time. You can do this here. If you're So if your tax rate falls next year, your 2017 deductions will be more valuable. Here's an example. A married couple earning $160,000, making a $1,000 donation. They currently have a 28% tax rate, saving $280. Next year, that savings, though, if their rate falls, is only $220. So you get the math there. Now, everyone's tax situation bill is different. So it depends on things like your income, where you live, if you have children, all kinds of variables. CNN has a simple tax calculator that you can use right now. It's live right now to help you on CNNPolitics.com figure out what your tax burden will be, what your change will be for next year. So go to CNNPolitics.com if you want to see what your situation is.
The president said that the new taxes would be so simple, H&R Block would go out of business.
Oh, no, the phones are ringing off the hook.
Yeah, they talk about a boon for accountants everywhere,
for the
and a nightmare for all the folks in accounting who take care of your W-4s and all of this. Let's continue this conversation and bring in CNN senior economic analyst, former Trump economic advisor, Stephen Moore. Stephen, good morning. Happy holidays to you.
Good morning. I think what I've learned about this is I want Christine to do my taxes next year.
We all do.
That was a great idea. That was a great idea, Christine. I never thought of that. I'm in a high property tax state, so I'm going to take you up on that.
You call me. You call me.
My 2019 property taxes in 2018, right? I mean, that's a great idea.
I don't think they're going to let you do that, though. Actually, they're not going to let you do that, but they might let you prepay a year.
Stephen, the popularity of this tax cut is nowhere near what you would think it would be. Our latest one, 55% opposed, 45%. Obamacare is more popular than this tax cut. I wonder if it has something to do with the fact that on the campaign, the president promised this populist message that he was going to go after carried interest loopholes for hedge fund managers who are making a killing. That's still in there. This is a corporate tax cut. Can you admit that?
Oh, sure. Well, I mean, one of the chief aims of this when I got started 2 years ago with Donald Trump was to bring our business tax rates down. And we did that in a big way. And that, I think, will add to American competitiveness. So I think that's one of the gems of the plan, is making American businesses more competitive so we can create more jobs here. But look, on this issue of the polls, number one, as someone who worked on the Trump campaign, I don't believe the polls too much after they said that Hillary Clinton was going to win 40 states. But second of all, I think if you look at those polls, it's so interesting. What people think is that their taxes are going to go up under this plan, because a lot of people in the media have been saying that. I've debated some people here on CNN who've said, middle class taxes are going up. They're not going up under this plan. And I do think as people realize what's really happening with this plan, and Christine was right. Starting when are they going to change those withholding tables, Christine?
Starting February.
February or March. Right. Yeah, so that means people will start to feel maybe if another $50 or $100 in their paycheck each month, and I think they're going to like that. Moore's political rule is nobody ever lost an election for cutting taxes, but the graveyard is full of politicians who've raised taxes. So I think it's a good thing for the party and good thing for the country.
The president likes to talk about this being the biggest ever. It's not. I mean, Reagan had the biggest, both tax cut and tax increase. And if you look at that, Obama had 2 tax cuts that were greater than this one. But they also point to companies like AT&T who are promising $1,000 bonuses for 200,000 employees as a gesture that this is working. But there's more motivation there than just...
Well, I mean, there's tax benefits for doing those bonuses right now as opposed to next year for some of these companies. I mean, look, the companies do things when they can afford to do it and when it's good for their own bottom line, and they can afford to do. Some of these companies that are raising the minimum wage, I think it's so interesting. There's a worker shortage in this country at the moment, right? So raising the minimum wage also behooves them. By the way, I think 20 states, January 1st, their minimum wage is going to rise anyway because the states have voted to do that. So I'm hoping that next year, Bill, is the year of higher wages for people. If we really do have a tight labor market the way they say, wages should start to go up.
Right.
Well, Christine, that was always our objective, when we got started in this. So we really did want to orient this towards benefiting middle-class people who haven't had a pay raise in 15 years. Now,
but the middle-class benefits in here are temporary, and I know you think that they'll never let them expire, but the temporary nature of the middle-class tax relief and the permanent nature of the corporate tax relief, it's one of the reasons why I think the polls are so negative about this tax reform, because people say, oh, come on, this was a corporate tax cut vehicle. They put a little bit of temporary relief in for the middle class to sell it the way the president wanted to sell it, but really the focus was on companies.
Well, I was a little bit involved in the decision-making on that. We had to put about a $3 trillion tax cut in a $1.5 trillion box. And the strategy here is we're not dumb. We knew that the things that were most popular with the Democrats was the things like the child credit, the doubling of the standard deduction. And so we said, well, let's make those things temporary, because even if the Democrats take over Congress, they'll extend those. And the things Democrats don't like too much, which is cutting the business taxes, let's make those permanent. But I mean, we fully expect that those middle-class tax cuts will be, by the way, that's 7 or 8 years from now. I mean, the world's going to be a different place 7 or 8 years from now. But what I've urged Republicans to do, H.R. 1 in 2018 should be to make all of the tax cuts permanent. One other quick thing. You mentioned the carried interest loophole. I am so frustrated that we did not get rid of that. That was the big hedge fund managers that carried the day here, and it's just frustrating. And I'm with the American people. Why didn't we get rid of the carried interest loophole? They should be taxed at the same rate as everybody else. I don't know if you agree with that, Christine.
A lot of loopholes, and ultimately, the reporting I've seen is it came down to New York Republicans. They know that Wall Street is their bread and butter, and they weren't going to let that loophole close.
Well, a lot of those people are Democrats too. I mean, a lot of those guys on Wall Street are big Democratic contributors as well. But look, it was a flaw in this bill. I think a lot of Republicans are frustrated with it. Christine, you're right. We wanted to clear out a lot more of those loopholes in the tax code, and we weren't able to. We got rid of some of them, but not enough. And maybe that means we'll be talking about a new tax bill next year to clean up that mess.
And maybe then Ivanka can get her postcards. I don't know.